Bob, do you like donuts?
I love donuts, and that's my problem, actually. I like donuts too much. Scotty, the XLE Energy ETF today falling as Morgan Stanley lowers its estimates for the group, saying that despite geopolitical risks, deflationary headwinds are continuing to build with oil and natural gas prices likely to remain lower for longer. Let's drill down on this with Andrew McOrmond of WallachBeth and Nick Colas with DataTrek. And Andrew, Morgan Stanley reduced its price targets on gas exploration production companies 47%.
Yeah, it's
47% oil, E&P, 10%, but the prices keep dropping, particularly for natural gas.
Right, and it's going to drag the ETFs down with it. I mean, I noticed in the note that they talked about natural gas inventories being at all-time highs, also being a problem. XOP is like the XLE, right? But it's an equal-weighted index, and that in the last 5 days has gapped a 6% spread from oil, and traditionally it's a 1% spread. And that was the last 5 days before today. So I think that's been dragging down these ETFs.
Nick, how irrelevant can energy get? Energy is only 5% of the S&P 500. What was it, 15% 10 years ago?
That's right. You know,
tech is 21%.
That's right, and it's even less of the Russell 2000. Tech has really taken over so much of the market narrative that it's sucked up a lot of market cap. And on the flip side, you see energy go from 15% in 07 to 5% today, and as the note says, likely heading lower.
And yet we celebrate the fact that the United States is now a marginal producer of oil around the world with Saudi Arabia and natural gas. It's been fabulous for us, fabulous for our security, but it's been terrible as an investment. XLE, I looked at it this morning, energy ETF, same level it was in 2007. We've had no improvement.
Yeah, I think the U.S. gives it a floor. The U.S. production gives it a floor, but it stops it from going any higher.
So what do you do with this? All the energy hedge fund guys I know are gone, essentially. They've all left because Wall Street doesn't seem to care about it. Is there any room in a portfolio for owning energy right now?
I think the people that trade it, you're right, our hedge fund customers don't trade it, and you don't see managers that are seeking alpha choosing energy as their option. Now, you have the large strategists, Horizon, Stadion. They have to have an allocation to energy, and that's what holds these things up.
So where do you go? We got to go. Where do you go, Nick?
You hold the 5% holding, which is the S&P weighting, and just let it go on autopilot and rejoice in the fact that lower oil prices is good for the U.S. economy.
That's, I think, the correct answer. Very good. Thank you very much, guys.